Successful trading requires a solid strategy to navigate the complexities of financial markets. Here are 6 key approaches that traders can use to achieve success. 1. Trend following. This strategy involves identifying and following the direction of a prevailing market trend. Traders aim to capitalize on momentum by entering trades in the direction of the trend and exiting when it shows signs of reversal. 2. Range trading. Range-bound markets present opportunities for range trading strategies. Traders identify price levels where the asset tends to fluctuate between support and resistance levels. They buy near support and sell near resistance, profiting from the price oscillations within the range. 3. Breakout trading. Breakout traders look for instances where the price breaks out of a predefined range or pattern. 4. Counter-trend trading. Contrary to trend-following strategies, counter-trend trading involves identifying potential reversals in the market. 5. Fundamental analysis. Fundamental traders analyze macroeconomic indicators, company financials, and other relevant factors to determine the intrinsic value of an asset. 6. Technical analysis. Technical traders rely on chart patterns, technical indicators, and price action analysis to identify trading opportunities. By incorporating these key trading approaches into their trading plan, traders can enhance their chances of success in the financial markets. I hope that you liked the video and do follow our channel for more professional and business tips and other interesting videos. Thank you and goodbye.